One of the questions I hear quite a lot is, can I have more than one current account? The answer to that is absolutely, you can have more than one. I've currently got more than 20, and I appreciate I'm an exception. This is my job after all. Plus, I'm a money geek. So not only am I getting these accounts to check out all the features and tell you about them, but I'm also taking advantage of a lot of the different perks and features that come with them. So absolutely, yes, you can have more than one. So the follow-up question to that is, if you can, should you? And then from that, again, how many should you have? Well, first of all, I'll talk about the whys, and then I got into the how many. And don't worry, it's nowhere near the amount that I've got. 2 or 3, maybe 4, would be absolutely fine for most people. So let's just go through, I think, some of the 10 reasons, the main reasons why I think you should have more than one current account, not just relying on a single one. The first one of these is, what happens if there is a technical issue with your bank? Now, it's been a good few years now since we had that absolutely horrendous meltdown from TSB, where people couldn't access their accounts for a decent extended period of time. But every month or so, there's a report here or there, the downtime detector telling us that such and such bank isn't available, such and such app is down, whatever it might be. Although often those things are only for a few hours, sometimes they can last a whole day or another day. So my big reason, number one, why you should have more than one current account is because if something like that happens and you do need to access some cash, you can do that because you're keeping some money. Obviously, as a result of that, you're keeping some of your money in one account or the other. You've got that ability to access some cash, access some online banking if you really need to, in the event of some kind of technical difficulty, which happens, as I say, wish it wouldn't happen, but the more and more digital we go, the more and more likely these things are going to happen from time to time. The next one to talk about here is a more practical one. And this is about how you manage your money. If you've only got a single current account, that might also mean you've got just a single bank account, full stop. All your money is in your single account. So whether it's money that's going for paying for bills, money for nights out, money for savings in the future, money for emergencies, whatever it might be, it's all sitting there. It's very difficult to actually keep track of what is what. What much do you actually have on a daily basis, particularly as you're spending throughout the month, that balance is going to go down, money comes in, it goes up and down all the time. So absolutely, the reason to have a separate account is to separate out some of these things, particularly your savings. Of course, it doesn't have to be a current account that you can have separately for your savings account. You can have them in a separate savings account itself, or maybe an ISA, or maybe premium bonds, or any of those different options out there. But I do think there are benefits sometimes from having a current account for savings. And the big reason for that is access to higher rates. Some of the top paying ones, particularly the time I'm recording this, but even last year, the year before that, the best rates have either been in a special current account or in a current account linked savings account, that you have to have that current account in order to access that rate. So again, these things will change. Be clever with your cash.com/savings is where to go to check for the latest rates across all different providers. But at the time of recording this, you can get 6% on up to £4,000 with the Santander Edge current account with a linked Santander Edge Saver account to that. So you have to have that current account to access that savings account. You can get 7% in a regular saver linked to a First Direct current account, 6.5% in a linked regular saver to Nationwide, 6.25 to Club Lloyd's current accounts, all these different options out there. So absolutely, it's having that money, having a separate current account with access to those savings accounts will be a big benefit. And again, that goes back to what we were saying before. If there is a reason that one goes down, if you've got another one where you can access that savings through that current account, not always the case with regular savers, to do watch out for the accessibility there, but that is another really good reason to do it. Now, the flip side of this, my third reason to have an additional current account, is only going to apply to those of you who regularly use your overdraft. So if you're regularly using your overdraft, that probably means you don't regularly have savings, because really you want to use your savings to wipe out that overdraft debt, or any debt if you can. But assuming you have an overdraft and you're in it all the time, we go back to that same problem we had before about how do you actually keep track of that debt? How do you know what is money you owe to the bank? And if it's in your overdraft, it's going to be probably 40%, one of the highest, most expensive debts out there, 40% interest. How do you know what you owe when, again, you've got money coming in, money coming out for your everyday expenses, your income, all that stuff? It makes it difficult. So what you could do here, the trick is to open up another current account and make that your main one for your everyday spending. Your salary goes in there, your bills come out of there, all your spending comes out of there. The debt, the overdraft, that sits just in the existing account. And that is purely treated as a debt, a standalone debt that you want to try and clear as fast as you can. And you can see it because there's not changing week after week, day after day, it's staying as it is. you see that when you put money in there to reduce it, everything you can to pay down that debt, it will get lower and lower and lower and closer to zero. There are a few other things you possibly might be able to do, as well as like clear it with any savings you've got to bring it down. Maybe a money transfer credit card and things like that might help you there. But absolutely, it's a really good reason to have an additional current account if you've got an overdraft, purely so you can treat it like a separate debt rather than it just getting lost and confusing and keep racking up interest all the time. Now, the next one is something that's becoming more and more prevalent at the moment, is more and more important right now in order, I think, to diversify the number of accounts that you have, although there is a risk of going too far with this. But this is to protect your cash from scammers. We have seen, you don't have to look beyond the news online or just talking to people on social media as well, how many more phones are being stolen. We covered that in detail on the site and the YouTube channel and the podcast earlier this year. One of our followers who had a huge amount of cash stolen from their accounts and their phone was stolen. They're all equally on the rise. You've still got these scammers who will get on the phone and pretend to be from a bank or any of those other kind of ways that people try and access the money, fool you into it, either something you kind of fall for, or maybe you make a mistake, whatever it might be, taking your money. Now, again, if it's all in a single pot, they will get all of that cash if they access that account, won't they? But again, if it's spread out through a number of different accounts, that makes it a lot harder for them to do that. Another big reason to have more than one. Now, I said obviously this can go the other way as well, because if you do have multiple accounts, and let's say the scammer or the thief has got access to your phone, and if they've also got access because you've got the same passcode or password or whatever it is on all your different banking apps, then they can obviously potentially fraud by moving money between those accounts. So again, important thing there is if you're doing this, not to have the same login details, the same account information there, so they can't access each one and still work around some of the protections that some banks have in place, because some are better than others. Now, let's move on to something a bit more practical though. Another reason here to have an additional current account is for those of you who are in a relationship or potentially have shared financial commitments. So it could be a sibling, a parent, a child, maybe a housemate as well. I mean, again, you've got to think about who you are doing this with, because this is obviously a joint account, one that you can manage together. I say it's important to think about who you do this with, because if you have a joint account together, you'll be financially linked on your credit report. So if someone's got a bad credit report, that will hurt the person with a good credit report. And there's more to think about there. But broadly speaking, if you are sharing payments, sharing spending, could be bills, could be going out, whatever it might be, could be a holiday fund that you're saving towards. You have a shared joint account, means you can both see the money, you can both keep a track of what's going in, what's going out, and you can kind of, again, pull that money together. So rather than sending money to one person, you both put the money in the joint account and it all goes out. You have to talk about this, obviously, first of all. You have to be careful. And this is, I think, when it happens, it's rarer that it's deliberate, but it can absolutely be deliberate. But there is always a risk of financial controlling going on, particularly within a relationship, and people keeping an eye on certain payments. Why have you spent that on that? Or judging people, because everyone's got a different kind of attitude to spending as well. So absolutely, I would never have just a joint account either. I would have your own account for your own money, for your own spending, but the joint account for joint spending definitely can be a big bonus there, a big benefit. Next up, another reason to have an additional account is one that will help you specifically with budgeting. Now, this is what I kind of think of maybe as your kind of spending account. I kind of alluded to it before. So yes, you've got your main account, your normal account, your salary comes into there. But this account, then rather than all your day-to-day spending coming out of it, you do that in a different account. So you would transfer money over after payday, how much you want to transfer, how much you can afford, over to that account, and that's the one you use for everyday spending. And the reason why I suggest this is an additional account, and remember, a lot of these accounts can be the same account. I'm not saying each one of these is a reason to get another account. You could have one extra account that covers 4 or 5 of these different things I'm talking about. But this additional account, you send over, let's say it's £250 every single week, and it means you can much better control, much better understand how you are spending that particular week. You can do it monthly if you want, you can do it daily, I suppose. You're keeping an eye on that spending and really making sure you're not, as we all know, right, it always happens, just spending and kind of going over budget. Even if you don't set a budget, just spending more than you intended, just because life happens, right? That's how it works. But a great way of doing it. And in particular, I think there are some accounts which are pretty good at this. Monzo, Starling, Chase, Hyperjar as well, because they also, in addition, let you break down some of these different spending sections into separate subspaces or pots or sub-accounts. Other banks do it, but they're the key ones that will allow you to do this. So this current account is great. I'm going to send this money over. 50 quid is for eating out. 30 quid's for taxis, 100 quid is for groceries, however you want to do it, right? Whatever your spending allowances are, you can break it all down like that. And in fact, Chase is pretty good for this one because you can select before payment which of those accounts you want your debit card to connect to, and that really break it down. So if you need help with budgeting, another really good reason to have it in a separate account rather than your main account. There are also some extras that come with this as well. Another reason to have multiple current accounts, and more than just one more, a reason to potentially have 2 or 3 extra ones, is because there are accounts that come with little freebies and little extras. So you can actually make some money by having additional accounts. I've covered these in a lot of detail before, so I won't go into detail on all of them. But for example, Club Lloyd's will give you free Disney Plus or cinema tickets. The Halifax Reward account, of which you can have 3 of them, will give you £5 a month or a free cinema ticket every single month. Chase will give you 1% cash back on your spending. The Santander Edge account will give you 1% cash back on your bills. So they are all good reasons to have additional accounts to cover all those different pots, get the freebies, get the cash back, and specifically use them for one of those different reasons. Sometimes you don't even have to use them on a regular basis. You can just have these extra accounts earning you this money, which is kind of what I do with my Lloyds and Halifax accounts. They're just making me money, a little bit of admin, either once a year or once a month to ensure I meet the criteria, and then the rest of it is mine. Whereas say the Chase and Santander ones, that's regular sort of money coming in month after month as well, based on your actual spending, which if you're spending money anyway, it seems silly not to take advantage of at least some of these. A few more to go through. Number 8 of my reasons to have another account revolves around bank switching. Again, you know that I love bank switching. It's a great way to make extra money. Offers can be up to £200, sometimes even more than that, each time you change bank. But you don't want to be changing your main account on a regular basis to keep taking advantage of these offers, because there are going to be some knock-ons from doing that. Not only on potentially on your credit score, but also on the fact that some of these other features we've just spoken about right now, you might want to keep some of those accounts in action because of the savings account, because of the freebies, because it's your joint account, whatever it might be. So if you have additional accounts, I tend to call them dummy accounts, the whole purpose for these is to switch them, just to get that free cash when these offers come along. So it's another good reason to have an extra account available to you at any time that you don't need, that you don't want, that doesn't give you anything, but it will be there ready to go when a switching deal comes along that you're able to take advantage of. Right, number 9 is something which, again, I think hopefully if you are getting 2 or 3 different accounts, one of those accounts is this, and it's one with a branch near you. Now, I know it's getting harder and harder with so many of them closing all the time, but let's say you've gone for the Nationwide one for that bank switched offer, or maybe for their regular saver, or Lloyd's again for their freebies and their savings account as well. Whatever it might be, whichever account it is, try and have one which you can walk into if you need to. There are times when you do need to do this, right? And a number of these digital banks, much as I love them, they don't have branch access and they have restrictions that come with that. It's rare that we have like cash and checks. I know a number of apps will let you pay in money by a check right now, and most banks will let you pay money in to a post office. But I still like to know that if I need to at any time go into a branch to make some kind of transaction, I can do that. And then once it's in the account, if it's cash or checks, I can transfer it across digitally to another bank, the ones that I use for most of my money. Or conversely, if I need to withdraw large amounts of money and I want to do that securely, not just from a cash machine, then again, I can transfer it from one bank to another, the one I use normally to the one with a branch, and go in and do it. It also has benefits if something does go wrong, but of course that's got to be more likely if it's a regular account that you're using on a regular basis. Perhaps if you are using a Santander account to pay your bills to get that cash back, it's great if you've got a branch in town as well, because if something goes wrong, you can talk to someone. But that's certainly one to think about. And the last one here is, I think, also really important if you ever go abroad. Now, more and more banks are offering fee-free spending when you go overseas, some with restrictions, some with kind of an unlimited amount in terms of actually spending, and some in terms of ATM withdrawals as well. But not all of them do. And the ones that don't will charge you a decent amount of cash every single time you spend, every single time you take money out of that cash machine. And it will add up. Even if you're a weekend away, 2 weeks away, whatever it might be, you don't need to pay it. So again, the big ones here for me are Chase, because not only is it fee-free overseas, but you also get that 1% cash back abroad as well. But Starling's really good for this. Hyperjar is good. First Direct does it. Monzo does it, although we're a couple of restrictions going on there. But again, we've covered a lot of the features why you might want one of those accounts already. So if you've got it for the savings account, you've got it for budgeting, whatever it might be, for cashback, well, then you've also got it and have it in your wallet ready to use. Even if it's not your main account day to day, you've got it there to use for when you do go abroad. So there you go, 10 reasons why you should have a current account. As I said, I don't think you should have that many. You don't need a huge number. I think the ideal number for most people is really going to be 3. Gives you a little bit of ability to, one, have that account that you want to use day to day. Gives you the ability to get some additional features that come with that. Hopefully some of those perks are a cashback or freebies, and some of those also will double up in terms of access to those higher paying savings accounts as well. So that will give you a decent option there. And also it gives you the ability to make sure if something does go wrong, you've got those alternative accounts to be using. Now, very quickly, I do want to cover as well some things you need to be thinking about when you do this. One of them is applying for these additional accounts and your credit score. Going to cover that in more detail, so do check out. I've got both a video and an article taking you through what you need to know in terms of bank switching and bank applications and your credit score. But the main thing here is, for most current accounts, when you open up a new one, you will have a hard credit check. Not all of them. So, for example, Starling and Monzo and Chase won't do this. Monzo will do it if you apply for an overdraft. But as long as you don't do that, you can open one of those up fine. But the rest of them, all the big banks, they absolutely do a hard credit check. And that can have the more of these you have in a short space of time, the more of a negative impact it can have on your report, which can be an issue if you are applying for other things such as a mortgage, a mobile phone contract, a credit card, any of these kind of things. So bear that in mind. Also, you need to bear in mind as well how long you've had an account open for, the average age. So again, a good reason to keep one open for longer, actually, I should have said it before, is because it gives you that longevity on your credit report. So have a bonus of, rather than ditching one to open up a new one, keeping those older ones around is a good idea, even if you don't use it. So don't close them down if you are looking for other options for other features. The other thing to talk about here as well is managing them, because this can be a bit of an issue if you do have a lot of them. I think 2, 3 or 4, you're going to be okay. Just make sure you check the apps, make sure you meet all the criteria for those different accounts, if they do have things in order to trigger the perks and so on. But if they don't, and it's easy to forget about them, that could cause you trouble if something goes on. So for example, a while ago, I had a direct debit which wasn't active or shouldn't have been active, which I'd used for a bank switch offer, but it suddenly came back into life and took £1 out of one of my accounts, which I no longer use. Now, fortunately, I got a text message notification telling me about this, and I was able to sort it out and put transfer £1 to that account to clear out the money where that had left. But if you have a number of these, it's easier to lose track of that. So either make a note in your diary to check the apps on a regular basis, or maybe some of the banks will let you add accounts from different banks to that app dashboard, so you can actually see them all there in one place. If they don't, there are some third-party ones. There's fewer of these around than there used to be, but have a look at Snoop. Or if you want to pay, I think the first 6 months is normally free, but after that you have to pay. It's not too much, but Money Hub is a good option as well, particularly if you have a number of these accounts, plus your credit cards and other things as well. My name's Andy Webb. Thank you so much for watching. Check out these videos here for more ways to make the most of your money.